What's going on, guys? Today I'm answering a question from Terribly British. He goes, please could you do a video on your view of what constitutes a valid high or low on any time frame? Well, that is the $1,000,000 question. It is not an easy one to answer, but I'll try to answer with examples. So it's not uploaded yet, but it should be. I made a video, I think yesterday, and it's going to be uploaded somewhere around midnight tonight. And in there, I talk about an example for swing trading. And today we have the follow-up. But if you go in my archive, the market was around here, and I was saying that I would wait for a retracement. Oh, sorry. Let me just switch. There you go. Let me take it back. So the market was around here, and I was saying that around this zone would be a good point to short the market. And the basis for that was that we were moving from structure to structure. So let me just remove a few lines to remove some confusion. So let's take it back from here. So the way I look, I trace my lines and I look at market behavior is I try to go from structure to structure. And one structure would mean this is an uptrend. The other structure would mean up no more. And the other structure would mean, okay, we're going down now. And from structure to structure, you have to trace your lines from these highs and these lows. So for instance, at the beginning, you would have a line over here from this high. But then as the market penetrates it here and goes back to the top, then this line is invalidated. So you got to find the one that is acting in accordance to the market. So at some point, this would become the valid line. So it's this constant dance of retracing your lines and trying to figure out if it will hold at a future date. And now from here, you basically have the structure that says it's going up are higher highs and higher lows. But at some point, we get a lower high around here. So this one becomes a valid high, and this one as well, from the moment that it gets penetrated on the downside. So this was the point. So from this point on, this one is not necessarily valid. I don't want to say valid. I want to say active. So now I can connect this high, and it might act in the future as a resistance. And even as a support if price breaks it on the upside. And the reason I'm showing this example is that I was talking about this yesterday, and I was using these two highs because remember the market was here. And I was like, okay, I don't want to short this because we had this big puke coming down. So I want to buy on a reaction, and the resistance point is around here. So, and as this line is going down, then I would want to buy it on a bounce. Now, if the price would have bounced really aggressively, then the chances for a bounce are higher. But as I wake up this morning, I see this pattern here. And this is very different because now what I'm seeing is a megaphone. What is a megaphone? It is a reversal pattern. So now, not only am I not interested in a short, I'm tempted to go long because this is acting as the opposite of what I wanted to achieve here, which was to short. And this is the eternal battle of trying to go from one structure to the next and figuring out what direction the market you should trade in and the market is going to take according to technical analysis. And this is the dance. If the market would have went straight back up from here, then there's a bigger chance that the market would at least maybe not go break the low, but I would have a bounce and I would make a few pips and then call it quits. But now in this situation, what we have is a penetration on the upside. And perhaps it will test here, maybe even consolidate a bit, and then eventually go to the next connection of two highs, two valid highs, let's call them now. Because clearly this one is no longer good because it didn't hold up the test of time. And the longer a trend line is active, the least length of time it will survive. It will eventually be broken. That's just the nature of the market. So now we've broken this small trend line here. It was valid, if you want, until it is not. And now price has penetrated, so I have to see what's gonna happen here. But it is possible that we'll see the market go kiss that resistance before it reverses. But the only time I would short this is now if we have a structure on the downside. What I would like to see is a lower low breaking this one here, which is that. So if I don't see that, then this is not a short. And because of the fact that it went beyond this trend line and we have a reversal pattern, then I would move on to the next idea. And this is the hardest part about trading is you want to identify these highs and these lows, but you have to know when the highs are no longer useful to you. So let me find another example. So here we have that structure. So we connect the highs, and then we have a big penetration on the upside, thinking, oh, this is a breakout and an accumulation pattern. But not only there's no follow-up, like it retraces and it can't even hold, like the now support cannot even support the price. It goes right back in and then it fools people again and then comes back in. So you cannot base your trades only on trend lines, especially on small time frames. The reason I'm saying this is if we go back to our USD Canadian example, if we zoom out, okay? Let's go back on the weekly. If you remember in the last videos, this is what we're seeing. We have a strong rejection candle over here. So it is very likely that, like right now we are Monday, it is very likely that we will see the price keep going up for a while, but eventually we'll retrace and then we will see the downside of that move on a bigger time frame. So perhaps the idea of shorting this on the 15-minute is not good as a short-term trade right now, but it's possible that if we keep looking at it, we might have an opportunity to short it and hold a long-term trade on the weekly or on the daily. Because right now it could be just a retracement within the new downtrend. Because this was very aggressive, this move here. So now, what if the price starts to do this and you lose the opportunity to short? So I guess the answer to your question, Mr. Terribly British, is the shorter time frame you use for your trend lines, the less valid they are, the less the weakest they are. But also, you want to use them in the direction of the of which you want to trade the market on a larger time frame. So you gotta zoom out and you gotta say, okay, what is this saying to me? What this is saying to me is I'm looking for shorts. This is the greater idea. Now, I'm gonna try to look for trend lines in the direction of my wannabe trade, but I don't want to buy as there are higher highs and higher lows. I want to buy once the market starts to go on the other side and starts breaking lows because I want to be short. So that's the direction I want to be in. And these are what I want to short. So as the market does that, I want to short here again. And then my stops at previous highs and then lower these stops and pyramid into my position. But right now, I don't have a setup. I thought I did yesterday. I thought it was a good idea to wait, but by waiting, and not putting money on the line, I was able to see this megaphone, which is a structure that suggests a reversal, a temporary reversal. And since I'm trading from one structure to the next, like here we have a type of unequal head and shoulder pattern, if you will. Then we have a lower high, lower low, lower high, and now we have this reversal pattern. So it could be that temporarily we will see higher highs, and that eventually we will finally have the opportunity to go short on the downside. So long story short, use highs and lows to make trend lines, but never lose sight of the bigger picture. For instance, let's say we go back to this New Zealand USD example. On the daily, what we see is that this is a downtrend. So why would you go long even though your trend lines are showing a triangle? There was a triangle until this was penetrated, but it turns out that the market created a flag, which is a continuation pattern, and if you zoom out, you have the answer. So this was a short. So yes, you can look at accumulation, distribution, and trends and things like that, but the bigger trend always trumps the smaller one. And this is why nowadays I don't do much day trading. The day trading that I do is within the context of a bigger swing trade. So now I'm a swing trader, and I'm even more leaning towards investor, speculator, slash day trader, scalper within the right context, within the bigger picture. So don't lose too much sleep over a high getting broken. Try to look at the bigger time frames and figure out your plan of action for the next weeks, ideally, or even months, and then figure out which instruments would serve your purpose the best.